Folks, we've got to talk about inflation. It has obviously been something that's been important for the last year or so. I think we are at a pivotal moment where inflation could go one way or another. We're going to talk about this with Mr. Dan Bird, who's back after a week hiatus where he was out on the road. How you doing, man?
Actually, 10 days. I've been out for
10
10
days.
days.
There you
Yeah.
go.
We haven't talked for 2 weeks.
Oh, my goodness. Not
How
good.
about that?
There you go.
Yeah, it was good. It was fun. Hey, by the way, next week is Easter.
Okay.
Are we doing this next week? What
I'm
do you
going to
want to
do
do?
it. I'm
You
doing
are?
it. Yeah.
Whether I'm here or not, you're
I'll be doing something. Yes.
gonna do it. All right. I probably can do it as well. I'll have to double check, but
Okay.
so I think first off, let me share and I'll show my newsletter for anyone
Mhm.
that didn't see the last session that we just did. If you're interested, this is something I do for friends and family. By the way, I had one person asked to join it, but first they said, "I want to make sure that you're not going to sell my email,"
well,
which
that's a
which I
reasonable request.
which I completely understand.
Yeah,
I
me
mean, I
too.
hate signing up for something and then all of a sudden getting a bunch of junk mail as a
Yeah.
result. So I just want to put everyone's minds at ease. I do this. I started doing this just for myself, my family, my friends. That was it.
Yep.
And I do the research anyway on the
Yeah.
weekends. So I was sharing it. And when I share it with your listeners, that's strictly all I'm doing. I'm not
Yeah.
selling it to anybody. I'm not monetizing it, not
No.
making money on it. The
No,
emails
you're
stay with
you're adding an email to a list is all you're
a
doing.
distribution list. I'm adding it to a
Exactly.
distribution list, and that's it. It stays in
Yep.
my Outlook and doesn't go anywhere else.
That's awesome.
So hopefully everyone's mind can be at ease about that.
That's fair.
So let's talk about inflation. One of the things that I talked about in the newsletter is this chart right here. Put this in there.
Yep.
And the reason I looked at this is one of the stops that I made. I was talking to somebody and he said he was convinced that CPI was going up, was going a lot higher. So inflation was going higher. But the
Now
cost,
this is a recent conversation.
yeah, this was on my road trip.
Oh,
So
okay. Okay.
a week or so ago.
Hmm.
But he said, but the cost to producers, the cost of goods is not. It hasn't gone up at all.
Interesting. Okay.
Producers are just trying to gouge the public and make money on CPI. And to me, that sounded like, you know, crazy talk.
Okay. Yeah. Well.
But I wasn't sure, so I wanted to go back and research it. So
Yep.
I looked. This is the PPI, Producer Price Index.
Hmm.
The other thing that I'll point out here too was interesting. So you can see clearly the cost to producers. This is the wholesale costs
Hmm.
has been going up significantly until June of last year. That was peak inflation.
Yep.
It's been coming down since then.
Hmm.
Right down here is the pre-pandemic level. Here's 2020 before the pandemic started. You can see how slowly
Yeah.
PPI was. It was basically just going sideways, essentially,
Yep.
right? And then with the pandemic, it dropped off a cliff,
Yep.
and then it started coming back after the pandemic as people
Yeah.
left their
So
houses and started buying
supply
things.
chain. Yep.
Supply chain, yeah, all of that. Now, if the Fed had been getting my newsletter,
Yeah.
they would have said, okay, well, first off, I can see the producer prices have now, as of December of 2020, are now higher than they were before the pandemic.
Okay.
So that's
Red flag
concerning.
number one. Yep. That's
Yeah,
concerning. Yep.
remember back when they were saying it was transitory,
I do.
right? All through here, they were saying, it's transitory, which I understand why they said that, because they thought this big drop here and this comeback in the supply chain
Yeah.
would rectify itself, and everything would be fine. Well, and that's okay. It's okay to think that too. You do have to wait a little bit to see if that happens. But when we got over here, this is the rate of change down below. So this is the 3-month rate of change, and the one above it is the 12-month rate of change.
Hmm.
So right here in February of 21, you can see the rate of change has, first of all, you can see that the rate of change was going down, even as the PPI was going up right here. Again, reinforcing that it's transitory,
Okay.
right? Yeah, sure, the PPI is going up, but the rate of change is declining, so it's not going to last. Well, right here in February of 21, the 3-month rate of change spiked higher than it ever had been. And the PPI started to spike as well.
Yeah.
Right there is when the Feds should have started their rate hikes.
Oh no, when did they start?
Right here.
Oh, a year late. A
Way over
year
here.
late.
A year late. And then we had peak inflation here. But they were way late to the game. So they were a year late to the game. So you can expect them to be a year late to stop raising. We're already a year into it. But I mean, this is a really good example of where they should have started hiking.
Yep.
It also puts to rest the conspiracy theory that producers weren't paying more for their wholesale goods, and they're just gouging the consumer. All right. This is the inflation chart. This is what we'll be looking at week after next, I guess.
Yes.
CPI number comes out on the 12th or 14th.
Something like 14th,
that. 14th, yeah. I think.
Okay.
So this is March. So this is the month that they'll be looking at. The CRB has been coming up, but it's still lower than the beginning. The only thing that's higher is gasoline.
Okay.
Everything else is still trending lower. Yeah. Even though in the middle of the month they started spiking again. But on the CRB, which is these commodities up here, agriculture, energy, and metals, I put this dotted blue line here, which was the point where it kept coming down to and then going up. Kept coming down and going up right there.
Yeah.
And then finally in March, for the first time, it dropped through that level. And it's only now just coming back up to it. But even at the end of March, it wasn't back to it yet.
So yeah, and again, the surveys that are coming up would probably be mid-month. So could be near the bottom of all this.
That's right. Could be near the bottom. So I think the Fed will have a good number to look at with CPI.
So I think CPI headline was 6% last month.
It was 6.2. No, it was 6. Yes, that's 6,
right. Yeah.
Percent.
So I'm gonna guess you're calling for something in the 5s this time.
Yeah, I called that last month. Didn't get it.
Yeah. I didn't want to put you on the spot like that, but that's okay.
That's all right. We can rib each other.
Yeah, of course.
You know, if you really want to be technical, looking at this rate of change chart, it actually says 5.99.
Okay.
So there is a 5 here.
Okay.
But the important thing here is look at the one that drops off.
Yeah, it's the big one. Yeah. This is and then this is the
big one's going to drop off. I think the Fed is going to have some good numbers. We'll see what the
do you think we could see like a 5.7, 5.6?
Yeah. Oh yeah.
Really?
5. Yeah, 5.6 or 5.7. Okay. Sure. Absolutely. With all of these things combined, with this big one dropping off, with the
and then again, this goes back to your point that you think the market's going to be generally up. Because again, if you get a 5.6 CPI on the 12th, the market's going to go ape shit. It's going to go crazy.
That's right. On I think it's April 15th, April 14th, April 12th. Yeah, CPI is April 12th. Yeah. So yes, if all of those things happen, if we get a reasonable jobs number, and by the way, on the jobs number, the thing to watch on that is the inflation rate.
You mean wages? That's what you're talking about.
No, I mean the inflation. I'm sorry, not the inflation rate, but the unemployment rate.
Right. Yeah.
4.6 last time. It's creeping up.
3.6 last time.
3.6. It's creeping up.
Yep.
And remember, I've talked about this before, that recessions don't happen until the unemployment rate is materially higher.
Yep.
So it needs to get above 4 before, and when it does get to that point, it's still 3 to 6 months before the recession happens.
Right.
All right. So watch that and watch the yield curve.
Yeah. Could you have the 10-year chart somewhere?
Yeah. Here's the yield curve.
Look at that. Man.
All right. So right now, it's starting to come back up, but it hasn't crossed yet. And this shows you the last 2 recessions it's in this one, it was 5 months from the time it went back above zero. In this one back here, it was 6 months from the time it went back above zero before the recession happened. So this thing has to really scream higher to even have any hope of having a recession.
Yeah.
That's why I'm not convinced it's going to be April.
Yeah, no.
But I wouldn't be surprised if it is sometime the end of the summer.
Okay.
So after this next 6 weeks in the market, then we're going to hit the summer doldrums.
Right.
And then it might get a little dicey in the market.
Okay. Yeah, I think you're right. I think there's some data. I think the market generally wants to go higher. I think there's a general belief again that that a recession is out there and the Fed will have to pivot. I think there's currently 100 basis points in Fed cuts out there.
Mm-hmm.
I think there's a general feeling that the next meeting will be the last raise. If not, we've already had it. So I think there's a lot of trends going. I do think the base effect is going to make the CPI number on the 12th look good. And I think the more important thing for me is I think the housing data gets better after this meeting.
Mm-hmm.
So again, it's going to all lead to the second step of inflation getting us into the fours by the summer, right? So again, the Fed's going to be renting. We're going to be restrictive. We're going to have positive real rates. I think it's all coming. It's going to be a wild 6 weeks. And I think you're right. I think the market naturally wants to go up. And man, you get a 5.6 CPI number on the 12th. Oh, it's going to be wild.
Yeah, but don't wait. Don't wait for it.
No. If you're a trader, don't wait. If you're an investor, get your shopping list ready. But yeah.
Well, I mean, if you're an investor,
sure. Yeah.
Buy it now and hold.
Yeah. Yeah.
The last thing I want to talk about, and this is a little esoteric, so bear with me. This is called a McClellan Oscillator.
Oh, don't.
And
heard of this one.
Let me take a second to kind of define what this is.
Okay.
It basically, this is the calculation for it. It's basically calculated using advancers and decliners. So it uses moving averages and it determines how many stocks during the day have advanced and how many, or in other words, have gone higher during the day, and how many stocks have declined, how many have gone lower. All right. So positive and negative values indicate whether more stocks on average are advancing or declining. That's basically what it shows. The bottom one that I'm going to show you is the bullish percent index, which shows you the percentage of traders that are bullish versus bearish. And this is something you can use to try to identify a bottom, although it's not the only thing. I want to make it clear that any kind of indicator that you use should not be the only indicator.
Right.
You have to use all of these tools like they're in a toolbox. So if you have a screwdriver, if the only thing in your toolbox is a screwdriver, you can't cut a piece of plywood, right? You've got to have multiple tools. You got to look at them all. So now let me show you the chart. So the one up here on the top, the one in the middle is the NDX or the NASDAQ 100. The one on the top is the McClellan Oscillator, and I used a 5-day moving average to kind of smooth it a little bit. But you can see where it crosses. So remember, this measures the advancers versus decliners.
Right.
So where it crosses is I put a vertical green line or red line where it's a buy or a sell. And you can just follow that down to the NASDAQ down here. And you can see it's a pretty good spot to buy. This was a good spot to sell, buy, sell. And the buy, there's actually two buys down here because I used the one down below, which is the bullish percent index. Usually they are pretty much close to each other. They're almost exactly at the same place. But this one here generated much earlier, way back here in the middle of March. And the McClellan Oscillator didn't generate until just last week.
Okay.
So there's the first one, and there's the confirmation, and it just broke out above this resistance line. Again, this is just reinforcing that I think the market is going much higher in the short term, the next 6 weeks. But this is a cool indicator just to identify turning points in the market.
Nice.
This is, again, the kind of thing, one of the tools that I would use as I'm getting into the market now, one of the tools that I will use to determine when we hit that peak, when that inflation, when the consumer starts to roll over, when all of those things start happening,
right,
and the market recognizes it, and the market's going to recognize it before those things start happening.
right.
So the market will start rolling over before. So I want to use tools like this to try to identify when that's happening. This was in my newsletter.
I want to key on a word you just said. So it sounds like you are either have or will be putting money to work shortly.
I have already.
Okay. All right. I like it.
Yeah, I've got some tranches, some initial, trial buys already in there. If the market continues up, I'm going to add to them.
Okay.
And I will probably continue to do that over the next 6 weeks.
Okay.
And then we'll see what happens in 6
well,
weeks.
we will be checking in with you every Sunday. We will double check Easter to make sure that still works for you. But yeah, this is a lot of fun. This is something I never knew about, this oscillator. So thank you for sharing it.
Yeah, there's a bunch of things like, and I don't recommend, especially new traders, try to use stuff like this. I would get really good at the simple stuff.
Sure.
A few moving averages, the RSI and MACD that I talked about here before. Right. Just get used to those, and remember, always keep in mind that the reason this works is because everybody is watching it. All the other traders are looking at exactly the same thing.
Yep.
All the other traders that might be looking at the McClellan Oscillator, saw it moving up right here. They said, oh, the market's getting ready to start going higher. I'm getting in. So bullish percent index started going up. And then this hit the green line up here.
Very cool.
But that's why it works. That's why that's why you have these resistance levels, because these people back here just want to get out at break even. So they're going to sell when they get to here.
Yep.
That's the reason technical analysis works. It's not some kind of magical thing. It works because it's crowd psychology. It kind of measures and gives you a visual view of crowd psychology.
Very cool. Well, it's going to be a lot of fun. I am going to be entertained by following you the next 6 weeks, which I know my audience will. And your newsletter is?
breakpointtrading@gmail.com. And I'll send you last week's newsletter and then put you on the list.
There you go. Thank you, buddy. Appreciate you.
All right. Have a good weekend.